Hey guys, my name is Katie with Credit Innovation Group, and today I'd like to talk to you about how student loans affect the process, whether that process is getting qualified for a mortgage or whether that process is going from ineligible to eligible, becoming debt free. We need to know how student loans are impacting Americans' financial futures. So let's get into it. There's a couple of things that you're going to catch on that I feel pretty salty about when it comes to student loans. I'm a licensed loan officer. I'm not an acting loan officer, so my licenses are not active. I'm not currently originating. So nothing that I say is going to be financial advice or, trying to get you to accept any type of mortgage terms or anything like that. All I'm going to talk to you about is some industry experience and how we know student loans interact within that space. So let's begin with what it takes to get a student loan. First of all, if you understand what it takes for literally an 18-year-old to rack up a ton of student loan debt, you'll understand why I feel a little bit salty, especially coming from the lending world. So if you are enrolled in a school, you're 18 or more, you are an eligible citizen or non-citizen, um, and if you're male, you need to be enrolled in the draft. Okay. I think those are the only qualifying factors for someone to be able to take out student loans. All right. Um, Now that's pretty wonderful in some sense, which means that virtually a higher education is available to anyone, and that's great, right? But if I were a loan officer in the lending world, or if I'm a mortgage company, I have way more skin in the game than that. Let me explain. So if you come to me and you're trying to buy a house, it is my responsibility to make sure that I give you a loan with terms that you can actually repay. All right. So I have to underwrite your job history and make sure it's consistent, and your income history and make sure that it's been stable or increasing. I have to underwrite the property that you're trying to buy to make sure that you bought a good deal. I have to underwrite, I have to make sure your house is insured and your taxes are paid and your monthly payments so that no one else can swoop in and destroy your house or the government can't take it, right? There's so much responsibility on me as a lender to ensure that I don't give you a loan that you can't pay back. And legally, I can run into liability if I don't get that solved for you, right? Now, there are more reasons than just that a lender has to be hyper accountable to making sure that they're giving mortgages to people who can afford them, right? But that's a whole different video. The thing I'm trying to illustrate is if you're 18, why can you rack up so much debt with no understanding of what it's going to take to pay back? And there's some obvious answers, like the fact that you can't predict the future. So you don't know if that 18-year-old eventually gets a doctorate's degree and makes enough money to pay back their student loans, right? Um, there's all those pieces that I understand are really tricky. But what it has done to people essentially is you send kids off into the world, and to go get a higher education, they rack up a bunch of debt. And then once they get out of school, whether they get a degree or not, they may not get the salary that they thought they would be getting, right? And so they start life out with a big chunk of debt. Here's the other thing that makes me a little salty. So if I'm a bank and I give you a credit card, and let's say the credit card balance is $200 and you can't pay it back, all right? Or maybe you don't, or you just don't want to. The tools I have to use against you is I can call you a lot of times. I can ask you a lot of times. I can sell your debt to a creditor. I can trash your credit score. And then I have to move on if I'm not going to get it, right? Part of the name of the game in banking is that you're going to lend people money that you don't wind up getting back. If I am someone who can give you a student loan, that story is different, okay? If you default on your student loans, they fall under the jurisdiction of the Department of Education, all right, which is a government entity. And the reason that the Department of Education had to get involved is because there is currently more student loan debt in the US than there is auto loan debt and credit card debt. That is giant So the government knew they would have to make some ways for people to navigate their student loans better, or there's going to be some bubble with negative repercussions happening. There already really is, because student loans are being blamed for a decrease in home ownership right now for people between the ages of 25 to 40. But the other piece that's at play is that they get to play by a different set of rules. All right. So if you default on your student loans, a couple things happen. One, your full student loan becomes due. So even if you begin making your payments again, they're not considered paid as agreed. So not only does that trash your credit, but they can also add fees and interest rate, interest payments, processing payments, all sorts of things that it takes to manage your loan to the top of the balance. So then your balance can increase even as you're making payments. Your credit just says that your loans are in default, even if you're making payments. So you really end up with this growing bad student loan. The government has more options than just a private company like a bank, or even an FDIC insured company like a bank. The government can take your paycheck, right? They can garnish your wages. They can take your tax return. They can come after assets. Only 15% of people pay back their student loans regularly, but the government collects 97% of all student loan debt. It feels un-American, right? I do want to encourage people to pay back their debt when they get it, but student loans have become a direct hurdle to the financial profile of Americans, especially people seeking homeownership, right? So what we have to do at Credit Innovation Group to really address that is we establish a full student loan department. One of the steps in our process is credit repair. Credit repair is a process where you help consumers challenge items that they feel are inaccurate, misleading, unverifiable. And there's not a good success rate at like removing student loans from credit. And on top of it, if you have a student loan in default, you're going to have a really hard time getting any mortgage company to work with you. And so we knew that we had to create some type of place for our consumers to come in and get their student loans in a way that they could maintain, that would actually be good credit instead of bad credit, and that would play well when they go to get a mortgage. All right. So that's what we ended up doing. And this was not after a lot of trial and error. We actually reached out to and worked with a lot of different student loan companies and student loan partnerships that we've had in the past. And the goal was that if we could send a lot of customers through to get student loan services, that we could get those customers really deeply discounted rates. But student loan services are ridiculously expensive. We just had a consumer send us a bill that she paid $800 for her annual recertification, which at CIG, because we don't charge extra for it, it takes us like 5 minutes to do, 10 minutes to do, right? You update your independence and your income and you submit it. So part of the problem is we kept telling people, go get your student loans fixed. And they had to ask themselves, should I do that or should I keep going down the road of qualification with Credit Innovation Group? And that is not a decision we want people to have to choose between, right? Those are both the right answer. So what we did is we implemented our student loan department, which is a full service student loan desk. They can help with everything from consolidating your student loans to establishing repayment plans that work for your income. We can help you do a rehabilitation, which is actually a 9-month process. It's it's the best way to get student loans out of default and back into a way that you can pay them successfully. We help people understand if they qualify for public service student loan forgiveness or other student loan forgiveness options. And we even help people set up their loans so that as long as they make 20 years of consistent payments, they can have their student loan debt forgiven. The biggest piece in play here is student loans should not be getting in the way of people purchasing their own homes, but it's become a giant hurdle. And so what we do is we help people establish their loans in a way that A, they can afford them, B, they show up as good credit as they should instead of bad credit, and C, they don't get in the way of having a secure financial future where you can build wealth for yourself and attain the American dream. So if you're working with CIG and you're one of our members, you need to remember that the student loan desk is free to you. and that you are welcome to reach out to them. Even if there's nothing to do on your student loans and they're already in good standing, we're happy to check in on them and make sure that there's nothing else that needs done. We're also happy to do your recertification every year as long as you remain a member. So for our certified platinum members who are only paying $14.95, that's a service that you have access to for all time as well. So thanks for taking the time to learn about how we deal with student loans at Credit Innovation Group and how student loans are affecting the mortgage process. It's a big problem we got to solve in the US, and it's one of the giant ways we keep setting kids off on the wrong foot. And so with more education, we can make the world a better place. Our goal here is always to increase home ownership in the US. We think that's the best way to get rid of things like poverty, help people build generational wealth, give people, the steering wheel of their own lives. And that's a big deal for us. Thanks for watching.